What's happening, my people? It's JD Trades. I'm gonna do something different. I'm gonna do last week's review. Okay, so in this type of video, we're just gonna sit down a little bit, talk about what's been happening in terms of this week's price action, or the price action that's just gone. So yes, I am in a different location. I decided to leave the gaff. I am sitting in a little cafe to, of course, get some food and get some work done. So yeah, with that being said, let's take a look at today's or this week's or last week's price action in terms of gold. So with gold, I did mention, look, if we come back to it from the daily / weekly perspective, I did mention to you guys, if you look at last week Monday's outlook, last week Monday's market outlook, I talked about how price has in fact dipped beneath the low and is working deeper into the imbalance. Now realistically, what I could see on the daily / 4 hour, mainly the 4 hours, how price has kind of printed this picture here. So we had price coming to the 4 hour / 8 hour area. We had price tap into it, we reacted, that's great. But then we had price dip down again, we took out that low and then reacted again. So then of course, realistically, I was looking for this to be the final push, but we tested the area, we started to push up. Of course, we understand what happened with NFP. We saw price rally and then slam all the way back down. Now at that time period, the daily candle was very bearish. It looked like we're going to get a very solid engulfing daily candle closure, and then the next day we might get a pullback and then we might get some lower prices. However, as you can see, we ended up pushing all the way back up on Friday and closing bullish, or a doji candle, as you can see there. Now that's where I did say to you guys, guys, with how we swiped the lows not once but twice, with this wick down, apologies for the noise, guys, with this wick down, we can potentially see price rally higher. And of course, hindsight is a beautiful thing because we are looking at hindsight data, but I did mention to you guys that this was a high probability move and highly probable of happening. So far so good in terms of overall move. Early on Monday last week, I did of course call out this gold long for you. The long setup was right here. So I'm going to use the replay tool and we're going to analyze this, and I'm going to show you guys exactly what I was looking out for, which helped me of course find this trade setup. Now, even though it is Monday and I don't really like trading on Monday, it was a very, very simple setup, and the understanding behind the practice, or the theory behind the practice, was very, very simple. And the main premise was of course seeing what's happened on Friday, and we saw price push up come London, pre-London open. We've seen price test this 15-minute area, we pushed up. So it was a very simple case of, we're going to get a potential retest of this candle here on the 15-minute, right? And I'm going to use this candle here on the 15-minute as our entry criteria, right? So now that price came over to that 15-minute area, I did in fact take a buy. Now, not too sure what's going on at the moment with my internet, just bear with me, guys. Cool. So the entry criteria, I entered off with the 15-minute time frame. Now I waited to see if we can of course take out some internal structure. So internal structure high, because I'm looking for some buys, so I want to see price take out some lower time frame lower highs. That's to put it into simple terms, right? So as we can see there, price progressed, right? We made this low, we took out this high, and I started to identify this 1 minute imbalance. I was like, it will be interesting to see how market is going to react inside of that 1 minute area. I really want to see a nice rejection and price hold this 1 minute imbalance and push up from there. So as we can see here, we came down, we tested the imbalance, and then we started to really rally, and that push was such a dramatic push. As you can see there, price never really came back, and that's how we were able to hit TP 1, 2, 3 and to the 4. Very, very simple move, and it really paid dividends with the highs, with this high being the target here. That was the target for that trade. Now for the rest of the week, we did of course come down towards Tuesday London session. We had I understood that there may have been potential moves I could have taken a part of, like for example this 1 hour candle. I could have used it as an entry. Of course, remember hindsight, hindsight, sorry, is a beautiful thing, and I'm not using hindsight when I'm trading. I don't see all this data before it happens, but I'm working with the best judgment that I can. Now, as you can see here, prices react off of this area here, and we came down twice, 3 times. However, I didn't take the trade. Now, the reason why I didn't take the trade is because I understood exactly what price is doing on the weekly time frame. I wanted price to work deeper into the weekly imbalance. And there's every right and every reason for price to actually come back down lower. Now, the one thing that I would say that I didn't quite manage to notice is this 4-hour imbalance and how significant it is. Now, I did understand that we had a 4-hour candle here. We can still technically push up. However, the 4-hour structure was still bearish because this is our lower high that created this lower low. We've had a lower high. We haven't created a lower low, but we've had the price push up again. So these are 2 lower highs, right? The market can, of course, run for previous lower highs before it makes a new lower low. And that's perfectly normal price action. Now, because I didn't quite pay attention to that area, let's just say, we saw price kind of hover around the area over and over and over. As you can see, we're wicking into that 1-hour candle once again before we actually started to see price rally. Now, one thing that I failed to, of course, take into account, especially on the 15-minute, is this picture here, right? Now, yes, we are in a range, right? But it's very important to understand where the liquidity is in the range. And at the time being, this is not something that I paid entirely too much attention to, right? Now, at the highs and the lows of price, we understand that this is where liquidity resides, but then we also understand this is the best places for you to buy or to sell, is at the highs and the lows of price. And right before we started to shoot off with the news event, right, what did we see happen here, right? We can see prices pushed down, held. With this wick to the downside, we've taken out these lows, okay? With this wick, this low here got taken out by this low here got taken out by this low, right? And since then, that's been the lowest point that we've held this whole entire time. Now, when we turn our attention over to the 1-hour time frame, we can see that price is just working inside that 4-hour imbalance. Now, I was very, very stubborn to kind of say to myself, look, I'm not going to look for any buyers until it definitely taps this 4-hour candle. But within the strategy that I use, I understand that price doesn't necessarily have to give us a full, 61% retracement, for example. It doesn't have to give us a play into the candle, for example. Imbalances are very important and they're useful tools because they can give you entries. Now, even though I didn't, of course, see that rally there, I should have been able to see this 15-minute candle. Now, ideally, the whole area is from this high to this low, okay? That's the whole area I should have noticed. We pulled back down, we held this 15-minute area, okay? Now, with us holding this 15-minute area, I should have said to myself, you know what? If I'm not confident to go in for the buy off of that 15-minute area off the jump, then why can't I wait to see some sort of confirmation? Why can't I wait to see price give me a little bit more confidence to be like, okay, cool, there's a high chance of us going up? And the bottom line is, guys, price did give me that. Price did give me the ability to say, look, we're pushing up. Now, if you take a closer look at gold, right, on the 1 minute, we've got this lower low, we've got a lower high, we've got a lower low. So ideally, realistically, if price closes above this high, that counts as an internal break of structure, and that should be enough evidence for me to, of course, enter this trade for a buy. Now, I'm going to duplicate this. Now, even if I didn't, let's say, take the buy there, look, we had another high, we've created a high low, and we've pushed up. So now you should be, all the bells should be ringing like, hey, this looks like it's going to push up. This is giving signs of bullish price action. And if that is the case, then I should be looking for entries, right? So you can see here we had a pullback down into this 1 minute area here, right? My standard stop loss for gold is usually 40 pips, right? However, if I also wanted to cover this area here, I can give myself 45 pips. But in all honesty, guys, I would have given myself 40 pips. Now, yes, you could have, got the low of this candle, which is around 11 pips, but I'll be completely honest with you guys. Yeah. One thing that increased my my win rate, my win percentage is when I stop using these stupidly tight stop losses. Like it's really not worth it, guys. Yes, they look great in hindsight. Like, yeah, you know, I can catch X amount of pips, because they look great. You know, the shiny tool. However, if I just kept it at 40 pips, right, and I targeted the high, that's 2.6% gain back on this trade. Now, of course, I could have definitely held it for a lot longer. As you can see, price does hit well over almost 5%. Yeah, it does hit 5%. Where did you come from? Sorry, guys. It does hit 5% R&R for this trade if I just held the position. If I just believe that, hey, you know, this position looks likely to give us a move. Now, understand this, guys, and even something that I know myself is I'm not going to catch every single trade. I'm not going to see every single move. I'm not going to see price, you know, give me the setup that I usually take or I usually look for, and that's okay. Your job and our job as traders is not to always take every single trade, because guess what? It might not be suitable for your own risk appetite. It might not be suitable for your personality, for example. Maybe it might not even suit your own strategy. Let's say you're someone that likes to, of course, take profit at liquidity areas, but then this doesn't fit your risk to reward ratio of 1 to 3. I would always advise and suggest that you all have a minimum R&R of 1 to 3. Okay. However, as you, of course, increase your win rate, okay, you can now start to go for a 1 to 2. Now, the reason why I say 1 to 3 is because with a 1 to 3 R&R, you only need to be right 33.3% occurring of the time. Okay, it's just 33% of the time. So every 1 out of 3 trades, that's a win. You will be profitable. You can be right 3 times out of 10 and you will still be profitable. You won't be hugely profitable, but you will still be profitable nonetheless. Now, look, trading is just about numbers and probabilities. Understand that there's a higher probability of something happening more than others. You know, there's a higher probability of price giving you 100 pips, 200 pips, but there's a very low probability of price giving you 1,000 pips. Do you understand what I'm trying to say to you guys? So I really hope that you take in everything that I've been saying to you and you're enjoying this review of gold I've given you so far. I understand everything's very technical and blah, blah, blah. But guess what, guys? You know, if you're really serious about learning to understand the market, to read the market, then of course, guys, this is the right channel to be. If you want, I would really appreciate it if you guys, of course, hit the like button, okay? Hit the like button and allow this video to reach to other traders and other people that are interested in the space, and so that they are getting the real raw, okay, understanding and footage of someone that is trading on a consistent basis, right? With that being said, don't forget to like, comment, and subscribe. Make sure to check out my links down in the description box below. Always remember the theory behind the practice. Whoosh.